back to another video. It's Declan here, and today I'm just going to do a follow-up video to the YouTube short that I did there. Just letting you know that the CPI data report was out today, Tuesday, the 13th of December 2022. So if you found value in this video, please give it a like and please subscribe to my YouTube channel. It would greatly help me out, and it will help grow things and progress further. So yeah, thanks for your support as always. So I'll just share my screen with you guys now. 0.1 from a year ago. So the consumer price index rose just 0.1% from the previous month and increased 7.1% from a year ago. Like 7.1 from a year ago is quite an increase compared to with the respective estimates of 0.3 and 7.3. So analysts thought it would rise 7.3 within the year, but it's increased 7.1, still pretty close, and it was 0.1 the previous month as opposed to 0.3, which they were expecting. So core CPI rose 0.2 on the month and 6% on an annual basis, compared with respective estimates of 0.3 and 6.1. Stocks roared higher following the report as investors look for signs that runaway inflation is ending. Yeah, that's the main reason I was watching for the inflation report, because like I have investments in a few US stocks. Like I've just a small account with eToro, but I have shares in Boeing and Starbucks and a few like that. So inflation adjusted average hourly earnings for workers rose 0.5% for the month, though they were still down 1.9% from a year ago. So prices rose less than expected in November. That was last month. The latest sign that the runaway inflation that has been gripping the economy is beginning to loosen up. That's good for everybody in the US, and we hope the same will follow suit in Europe as well. We could all do with a break in these the price of goods rising considerably all the time the last number of months. So the consumer price index, which measures a wide basket of goods and services, rose just 0.1 for the previous month and increased 7.1 from a year ago. That's what I've just said above. The Labour Department reported Tuesday, that was today. Economists surveyed by Dow Jones had been estimating 0.3 monthly increase and 7.3 12-month rate. So the increase from a year ago, while well above the Federal Reserve 2% target for a healthy inflation level, was tied for the lowest since November 2021. That's also a good sign. Excluding volatile food and energy prices, which are pretty volatile here too, so-called core CPI rose 0.2 on the month and 6% on an annual basis, compared with respective estimates of 0.3 and 6.1. Stocks initially roared higher following the report, with futures tied to the Dow Jones Industrial Average of more than 800 points initially before easing a bit. That was just it was just on the good news report. So the Dow rose settled in to rise about 270 points in the first hour of trading. Cooling inflation will boost the markets and take pressure off the Fed for raising rates, but most importantly, this spells real relief starting for Americans whose finances have been punished by higher prices. Corporate economist, this is especially true for the lower income Americans who are disproportionately hurt by inflation, and that's the same in Europe, Ireland, everywhere. It's always the lowest paid workers that get hit the worst, unfortunately. Falling energy prices helped keep inflation at bay. The energy index declined 1.6% for the month, due in part to a 2% decrease in gasoline. Food prices, however, rose 0.5 and were up 10.6 from a year ago. Like 10.6 food prices, that's massive. I don't know the exact figures what they are now here in Ireland, but I'd say they're pretty much the same, because everything has been rising steadily. Fuel prices, food prices, etc. We're in the same boat here and across Europe as well as America. Even with its monthly decline, the energy index was higher by 13.1% from November 2021. The easing of inflation pressures helped give workers a lift after months of seeing wage increases fall well short of inflation. Real average hourly earnings rose 0.5 for the month, though they were still down 1.9 from a year ago. The CPI report comes the same day the setting Federal Open Market Committee, the Fed, begins its two-day meeting. Markets widely expect the FOMC on Wednesday to announce a 0.5% point rate increase regardless of today's CPI reading. So I just mentioned that briefly as well in my YouTube short about the CPI report, and the FOMC meeting is starting tomorrow, Wednesday. So the Fed could dismiss the better than expected October as just 1 month's data, but the further slowdown in November makes this new disinflammatory trend, that's a hard word to say, trend harder to dismiss. Paul Ashworth, chief North America economist for Capital Economists, wrote in a post-CPI note titled "Stick a Fork in It, Inflation is Done." Well, let's hope inflation is done. So yeah, I hope you did enjoy this video. So if you did, please consider subscribing to the YouTube channel. As I said earlier, it greatly helped me out. Just a small channel, and I do a good lot of research to bring all the stock market analysis, the CPI reports, earnings reports, etc., to keep everyone up to date with things, as well as myself. But I find it very interesting, and I'm having an enjoyable experience with it all. So until next time, yeah, as the CPI, it's been positive. So stocks should rally in the next few days, and things should improve. People will feel they have more money to spend, and will hopefully be able to feel less stressed about things and everything. So yeah, I'll leave it at that now. And as I said, thanks again, and take care.